Markets going crazy? Volatility spiking like wild? Don't panic, because the real pros stay ice cold, and today I'll show you exactly how they do it. If you've ever freaked out during a fast move, this is the video you should not skip. Look, every trader says they want to be calm until the chart starts shaking, stops get hit, candles explode, and emotions take over. But here's the truth. Pro traders don't stay calm because they're special. They stay calm because they follow a simple system that keeps them in control even when the market is going nuts. And in this video, I'm breaking down exactly what they do, step by step. You're going to learn why most traders panic, how pros avoid emotional decisions, the mindset they use during violent moves, and the one technique they rely on when things get scary. So stick around, because once you understand this, volatility will stop controlling you, and you'll finally start thinking like a pro. Let's jump in. You know, it's funny how every trader talks big when the market is calm. Everyone feels like a genius when price is moving slow, candles look friendly, and nothing wild is happening. But the second volatility kicks in, everything changes. The whole vibe of the chart shifts. Price starts shooting up and down like it drank 10 cups of coffee. Spreads widen, momentum spikes, and suddenly the same trader who felt like a beast 5 minutes ago is now sweating bullets, clicking random buttons and wondering what the hell just happened. And this reaction, this panic, is something every beginner and intermediate trader goes through. Even some experienced traders still fall into it without realizing. The real reason traders panic during volatility has less to do with charts and more to do with the human brain. See, the moment the market starts moving fast, your brain flips into survival mode. It doesn't care about your strategy, your analysis, or your fancy indicators. It cares about one thing: avoiding pain. And losing money feels like pain. That's why when volatility spikes, your heart rate jumps, your breathing changes, your body tightens up. It's literally your system going, "Yo, danger, danger, do something." And because of that, your decision-making gets hijacked by emotion instead of logic. Beginners especially fall into this trap because they haven't built emotional tolerance yet. They look at fast price movements and think the market is attacking them. Every candle feels personal. A little pullback feels like a threat. A sudden wick feels like punishment. So they start making emotional decisions, closing trades too early, jumping in too late, flipping positions like a light switch. They're not trading, they're reacting. And when you react, you lose. Every trader does this in the beginning because nobody teaches you how to handle your emotions. They only teach you chart patterns and indicators. But none of that matters if your brain melts the moment the market speeds up. Intermediate traders fall into a slightly different trap. They don't panic because they're scared. They panic because they think they know better. They get this false confidence. They believe they can outsmart the volatility. They think, "Bro, I got this. I've been trading for a while. I know what I'm doing." But when the move gets aggressive, they start guessing. They widen stops. They hold losing trades because they believe it'll bounce. They double down. They take trades they shouldn't take. And the moment they start breaking their own rules, panic kicks in even harder. It's like digging a hole and jumping in deeper instead of climbing out. And then there's another emotional trap that messes with literally every trader, no matter what level they're at: the fear of missing out. Volatility makes the market look exciting. It makes every candle look like the one. You see a big pump and suddenly your brain whispers, "You're missing it. You could be rich right now." So you jump in too late and the move slaps you instantly. Or you see a big dump and feel like you need to save the trade, so you chase the move and boom, another loss. Volatility tricks your brain into thinking something big is happening, even if it's just noise. Another huge reason people panic during volatility is because they're trading sizes that are way too big for them. I don't care how good your strategy is, if your position size scares you, you're going to panic the moment price moves. Your brain can't stay calm when every tick feels like a punch to the account. You can't think straight when one candle can blow your stop. Big size equals big emotions, and big emotions equals bad decisions. And let's be real, a lot of traders panic because they're actually not following a system. They're improvising. They're waking up, checking the charts, and then kind of feeling it out. But volatility punishes anyone who's unprepared. If you don't know exactly what to do before the move happens, you will panic during the move. Volatility isn't scary. Uncertainty is scary. And most beginners don't have a plan, so every candle feels like danger. Every pullback feels like a threat. That's why pros don't panic, not because volatility is easier for them, but because they're ready for it. And here's something people don't talk enough about. Your past trading trauma shapes your reaction. If you've been liquidated before, or blown an account, or held a losing trade until it destroyed you, volatility will trigger those memories instantly. Even experts who haven't dealt with their psychological baggage panic in moments they should be calm. The market is fast, but your emotions are faster. But here's the most painful truth. Traders panic because deep down, they don't actually trust themselves. They don't trust their system. They don't trust their analysis. They don't trust their risk plan. And if you don't trust yourself, volatility becomes a nightmare. Panic isn't caused by the chart. Panic is caused by doubt, and the chart simply exposes it. Now, the good news is panic can be fixed. It's not a permanent thing. Every great trader today once panicked just like you. They didn't overcome it by becoming smarter. They overcame it by becoming stable. They built control. They built discipline. They learned how to respond instead of react. They changed their relationship with volatility so that the same moves that used to scare them now create opportunities instead of fear. And that brings us to something super important, something that literally separates beginners from professionals. If you really want to stay calm during volatility, if you want to stop panicking and start thinking like a pro, you need to understand what professionals do differently in these exact same moments. Because here's the crazy part. Pros feel the same emotions you feel. They're human too. But the way they handle those emotions is what makes all the difference. So now that you understand why traders panic, it's time to look at what the professionals do instead and why they stay cool even when the market looks insane. So now that we've talked about why traders panic during volatility, let's shift into something way more interesting, what the pros do differently. Because here's the crazy part. The market throws the exact same chaos at everyone. Beginners, intermediates, experts. Nobody gets special treatment. The volatility doesn't slow down for someone just because they've been trading longer. The chart doesn't say, oh, hey, this person has experience, let me calm down a bit. Nah, everyone gets hit with the same fast moves, the same fake-outs, the same emotional pressure. But the reaction, that's where the difference shows. And trust me, the gap between amateurs and professionals has almost nothing to do with strategy. It's the mindset, the behavior, the way they approach the chaos. See, beginners look at volatility like it's some wild beast they can't control. Intermediates try to outsmart it, like they can somehow predict the exact high or exact low just by feeling the vibe. But pros walk into volatility with this calm, almost boring energy. It's like they're not impressed, they're not excited, they're not scared, they're just prepared. And that alone already sets them apart. One of the biggest differences is that pros expect volatility. They're not surprised when the market moves fast. They're surprised when it doesn't. They've already studied enough charts, lived through enough market cycles, and seen enough price behavior to know that volatility is not an exception, it's normal. And because they expect it, they don't freak out when it shows up. Imagine someone throwing a bucket of cold water at you out of nowhere. You'd jump. But if you were expecting it, you'd barely flinch. That's exactly how pros treat volatility. Another big difference is that pros don't try to predict every move. A lot of beginner and intermediate traders secretly believe they can call the market. They'll say stuff like, "Bro, I know it's going to pump," or "Man, this thing is about to drop hard, I can feel it." But pros think completely differently. They don't try to predict, they prepare. They walk into every trade already knowing what they'll do if the market goes up, if it goes down, or if it goes sideways. And that gives them something amateurs don't have: peace of mind. When you already know your reaction to every scenario, there's nothing left to panic about. Another thing pros do differently is they separate their identity from their trades. Beginners usually take every win personally and every loss personally, like the trade is some kind of measurement of their worth. But pros don't attach their self-esteem to the outcome of a single trade. They see trading like a long-term performance game. They know they're going to win some, lose some, break even some. They're not trying to win today, they're trying to win over months and years. That mindset keeps emotions under control because nothing feels like a huge deal. A loss isn't personal, and a win isn't a victory of the ego. It's just part of the job. Pros also have a level of discipline that most traders underestimate. They follow their plan religiously. If their strategy says don't enter, they don't enter. If their strategy says take the loss, they take the loss. They don't improvise. They don't force trades. They don't chase moves because they felt FOMO for 2 seconds. Their discipline creates their calmness. Beginners try to be calm after entering a trade. Pros are calm before they even think about entering one.
And here's something funny. Pros actually trade smaller than most beginners. People think pros trade huge positions all the time, but real pros trade sizes that feel comfortable. They trade sizes that won't shake them emotionally. They know that the moment the trade feels too big, their brain won't behave normally. They keep themselves in a position where they can think clearly. And because their size is under control, their emotions stay under control. And because their emotions stay under control, their decisions stay clean. Another powerful thing pros do differently is that they stay neutral. They don't hope, they don't pray, they don't get attached to one direction. They're not shouting at the screen like, "Come on, bro, go up, just a little more." They don't fall in love with their bias. They constantly ask themselves, what is the market showing me right now? Not, what do I want to happen? A pro can flip bias instantly if the market proves them wrong. They don't fight the chart, they follow it. One of the most underrated things pros do is they follow a process, not emotions. Beginners get into a trade based on a feeling. Pros get into a trade based on a system. And that system gives them something priceless: consistency. Pros don't rely on motivation. They don't rely on hype. They rely on process. And process doesn't panic. Process doesn't react emotionally. Process is stable, predictable, repeatable. And when your system is predictable, you become predictable to yourself, meaning you know you won't do dumb stuff under pressure. Another huge difference is that pros don't see losses as something to fear. They see losses as data, as information, as feedback. They don't hide from losses. They don't avoid them. They accept them as part of the game and move forward. This alone keeps them calm because they're not emotionally shocked when a trade doesn't work. They expected it could happen. They planned for it. They accepted it before they entered. Panic can't exist where acceptance already lives. And if you really want to understand why pros stay calm, it all comes down to this one truth. Pros don't try to control the market. They try to control themselves. That's the mindset shift that changes everything. That's what makes volatility feel manageable instead of terrifying. It's not that pros are emotionless, it's that they've learned how to regulate those emotions better than the average trader. And that leads perfectly into the next big part of the script, because now that we've talked about what professionals do differently, the next question is, what's the core principle behind their calmness? What's the foundation that allows them to stay cool while everyone else is losing their minds? And that's where we dig into the real heart of this, emotional regulation. So let's break that down next. All right, let's get into something that a lot of traders don't want to admit. Something that separates the people who survive in this game from the ones who blow up their accounts and disappear. And honestly, once you understand this, it hits you like, damn, this is what I've been missing. See, most traders come into the markets thinking the whole game is about prediction, predicting the next candle, predicting the next breakout, predicting the next move like they're some kind of market fortune teller. But the truth, the real truth that the pros already know, trading has never been about predicting the market. It's about controlling yourself while the market does whatever it wants. The market doesn't owe you consistency. It doesn't care about your analysis, your trend lines, your feelings, none of that. You can have the cleanest chart, the tightest setup, the best confluence on earth, and the market will still say, nah, not today. And that's exactly why emotional regulation sits above everything else.
If you can't manage what's happening inside of you, the market will destroy you no matter how good your strategy is. What most beginners don't realize is that emotional regulation isn't some fluffy self-help concept. It's a skill, a weapon, a competitive advantage, and every trader, beginner, intermediate, or seasoned, has to learn it, sharpen it, and protect it. Because no matter how many years you've been in the game, your emotions never fully disappear. They just get quieter if you train them. And here's the crazy part. The deeper you get into trading, the more you realize the market is basically a giant psychological pressure cooker. It's built to expose your impatience, your fear, your greed, your FOMO, your ego, your need to be right, your need to make it back. It pushes every button you have. And if you're not emotionally regulated, you start reacting instead of executing. Your strategy becomes sloppy, your risk management goes out the window, and suddenly you're in trades you shouldn't be in, holding trades you should have cut, and doubling down on trades you had no business touching. This is why emotional regulation is the core principle, because it protects you from you. When you understand that the market isn't something you're supposed to control, you stop fighting it. You stop trying to force setups. You stop trying to predict every tick. Instead, you start focusing on the only thing you can actually control, your response to whatever the market throws at you. That's where real consistency starts. That's when you become dangerous. Think about the traders who last 5, 10, 15 years. Not the social media hype traders posting Lambos after a lucky week. I'm talking about the real deal traders. They're not the ones screaming about predictions. They're the ones who almost look boring, calm, quiet, unbothered. They take a trade, they manage it, they take the loss if they have to, and they move on like nothing happened. They're not glued to the screen sweating. They're not chasing anything. Why? Because they've trained themselves to regulate their emotional state first and trade second. And let me tell you something blunt. If you don't learn emotional regulation, the market will teach it to you the hard way. That's why you hear stories like, "Bro, I lost everything in one night," or "I blew my account because I got emotional," or "I knew I shouldn't have taken that trade, but I did anyway." It's never a strategy issue. Almost every blown account at its root is an emotional issue. One of the biggest mindset shifts traders need to make is realizing that you're not rewarded for being right. You're rewarded for being disciplined. You're rewarded for staying calm when everything inside you wants to react. You're rewarded for walking away when your ego wants you to get back in. You're rewarded for waiting when your emotions want you to jump. And yeah, emotional regulation isn't sexy. It doesn't go viral. Nobody wants to hear, "Hey man, control your emotions." Everyone wants a magical indicator or a secret strategy. But the truth is, emotional stability is the closest thing you'll ever find to a holy grail in trading. Because when your emotions are in check, your decisions become clearer, your patience gets stronger, and your consistency naturally increases. Beginners need this because it prevents early burnout. Intermediate traders need this because it helps them break out of those annoying plateaus. And advanced traders, they know emotional regulation is what keeps them profitable for years, not days, not weeks. And once you start practicing emotional regulation, you realize the market feels different. You stop getting shaken out by small moves. You stop panicking when you're in drawdown. You stop forcing trades. You start seeing the bigger picture. You become the calm one when everyone else is freaking out. You start trading like someone who's actually in control, not someone who's just reacting to chaos.
And when that switch flips, something powerful happens. You stop chasing the market, and the market starts coming to you. And that right there is what sets you up perfectly for the next part of our journey. Because now that you understand why emotional regulation is the core principle, the next thing you need to know is how to actually master it in real time. How pro traders stay calm in the middle of chaos, how they avoid emotional spirals, and how they keep their decisions clean even after a bad trade. So in the next outline, we're going to break down exactly how professional traders maintain emotional control and avoid getting dragged into psychological spirals, step by step.
Now that you understand why emotional regulation sits at the top of this entire game, it's time to go deeper into something traders rarely talk about publicly, the stuff the pros do before they even click that buy or sell button. Because here's the truth, no professional trader walks into a volatile market just winging it. That's what beginners do. That's what gamblers do. Pros have something I like to call a stability protocol, a pre-trade routine, a mental framing system, a way of grounding themselves before the chaos starts. It's the difference between stepping into the market with confidence and stepping into it with hope. The funny thing is, if you watch a pro trader for a day, you'd think half their job isn't even trading, it's preparing themselves to trade. And it's wild because beginners think prep means analyzing charts, but pros, they're prepping themselves, their mindset, their reactions, their expectations. Because when the market gets volatile, and trust me, volatility is where the real money is made and lost, you can't rely on raw skill alone. You gotta be mentally dialed in. A lot of traders jump into a volatile session like, bro, this looks crazy, let me get in, it's moving fast, and boom, they're done. Because jumping into volatility without a stability protocol is like stepping into a boxing ring without warming up. You're stiff, unprepared, emotional, and the first punch, even a light one, knocks you off balance. Professional traders know that markets don't get dangerous because of price movement. They get dangerous because of the emotional reactions those movements trigger. Speed, noise, unpredictability, all of that can pull you into fear, greed, hesitation, overconfidence, revenge trading. That's why their stability protocol starts before the charts even light up. It starts with controlling their internal state. Some pros literally spend the first few minutes of their session just breathing, not in some spiritual guru way, but simply resetting their system. Slow breathing pulls your body out of that hyped-up, let's go energy and brings you into a calmer, more neutral state. Because if you start the session pumped, excited, jittery, eager, volatility will drag you. But if you start grounded, calm, composed, you can actually see the market for what it is, information, not threats or opportunities screaming at you. And before they even analyze setups, pros define their emotional boundaries. They don't ask, what can I make today? They ask, what state of mind do I refuse to enter today? That mental framing alone saves them from falling into spirals. They decide ahead of time that if they feel stressed or impulsive or frustrated, they will step back. They're not going to sit there trying to fight the market from inside an emotional storm. That's amateur stuff. Then comes the routine part. Pros structure everything to minimize randomness. Same time, same workspace, same pre-trade checklist, same warm-up analysis, same risk per trade. It might sound boring, but that's the point. Volatility is unpredictable, so your routine must be predictable. It's like creating a consistent mental environment so that whatever chaos the market throws at you, you're still centered. And here's something beginners almost always skip. Pros visualize their risk before they even take a trade. They mentally accept the worst-case scenario ahead of time. It's not negative thinking, it's emotional preparation. Because if you've already accepted the potential loss before pressing the button, volatility can't shock you into emotional reactions. You go into the trade knowing exactly what's at stake, exactly what you're willing to give, and exactly where your boundaries are. Some traders even go as far as grounding themselves physically, stretching their shoulders, relaxing their jaw, unclenching their hands. Because tension in your body bleeds into tension in your decisions. And when volatility hits, tension multiplies. So pros eliminate physical tension before it becomes mental tension. The last layer of the stability protocol is expectations, and this is huge. Beginners enter volatile markets expecting big wins, fast moves, and flashy outcomes. Pros expect uncertainty. They expect fake-outs. They expect emotional tests. And because they expect it, none of it surprises them. Their stability isn't shaken when the market whipsaws. They planned for it. They're mentally ready for it. And that readiness is what allows them to stay calm while everyone else is freaking out. See, the stability protocol isn't about controlling the market. It's about controlling the version of yourself that walks into it.
It's about making sure you're entering with the clear-headed version of you, not the impulsive one. Because in volatile markets, your worst enemy is never the volatility. It's that one emotional decision that sends everything spiraling. And what's beautiful about this is that it works for every level of trader. Beginners need it because volatility will intimidate them. Intermediate traders need it because they're the ones who usually get emotional in fast-moving markets and blow their progress. Advanced traders rely on it because they know consistency comes from self-management, not market predictions. But here's where things start getting even more interesting. Because having a stability protocol is great before the trade, but the real test hits after the trade goes against you. And trust me, volatility will test you. It will hit your stop loss, shake your confidence, make you question everything you just prepared for. That's why the next part of our script is so important. Now that you understand how pros prepare before entering volatile markets, the next outline dives into something even more powerful: what they do after a losing trade to reset their minds and avoid emotional spirals. So, we've talked about why volatility makes beginners sweat, and we've gone over how pros prepare themselves before even touching a trade. But here's the real moment of truth. The instant the market starts going crazy, that's when most traders lose it. Their heart's pounding, adrenaline spikes, they start second-guessing every decision, and the same plan they came in with goes straight out the window. This is where pros show the difference. Staying rational during a volatile move isn't luck or magic. It's the result of deliberate practice, systems, and mental conditioning, what I like to call live-action psychology. First, let's talk about breathing. Sounds simple, right? But most traders completely ignore it. When a move hits fast, your body automatically kicks into fight or flight mode. Your breathing gets shallow, your heart races, your body tenses, and suddenly your brain stops thinking clearly. Pros know this, so they do something basic but powerful. They control their breath. Deep, slow, measured breaths. In through the nose, out through the mouth. This one tiny thing drops your heart rate, slows your mind, and gives you a chance to see the trade objectively instead of emotionally. It's like a reset button in the middle of chaos, and it works every single time. Next up is position sizing. This is where beginners and even intermediates really mess things up. If your position is too big, even a small swing feels like a punch to the gut. Your emotions spike, your hands shake, and every tick feels catastrophic. Pros trade a size that they can handle mentally. They never put themselves in a position where a normal market move causes panic. This way, they can stay rational no matter how volatile things get. You want to think clearly during a move? Control the size of what's on the line. Then there's bias control. Most traders think, I see the trend, I gotta follow it no matter what, or it's gotta go up, I feel it in my gut. That's how you lose money fast. Pros don't get married to a direction. They don't let hope or fear dictate their decisions. Instead, they watch the market like a detective, constantly asking, what is it really doing right now? If the move proves their initial bias wrong, they don't panic, they adjust. They accept the market's reality instead of fighting it. That's a mindset shift that literally separates someone who panics from someone who profits. And execution discipline. This is where the rubber meets the road. The trade is live, the candle's jumping, the news just dropped, and every impulse screams at you to do something stupid. Most traders start moving stops, adding to losers, or chasing trades they shouldn't. Pros, they stick to their plan. If the stop is set, they leave it. If the target is set, they follow through. No hesitation, no emotional tweaking, no revenge trading. Their discipline is stronger than their impulse. They understand that reacting to fear or greed in the moment is how you destroy your account. What's amazing is that all of these things, breathing, sizing, bias control, and execution discipline, work together. They create a mental buffer. They turn chaos into data instead of drama. And the longer you practice them, the more automatic they become. Eventually, even in the wildest market swings, you're not emotionally hijacked. You're observing, executing, adjusting if needed, and moving on. Volatility stops being scary and starts being just another trading environment.
Another critical part that separates pros from everyone else is that they trust their pre-trade preparation. All the work they did before entering, the stability protocol, the risk definition, the mindset setup comes into play here. Because they already prepared for volatility, they don't react like a deer in headlights. They just follow their plan. Beginners often forget that preparation isn't just for calm markets, it's for moments like these. Without it, everything falls apart the second the market moves fast. And here's a real gem that not a lot of traders realize. Pros also know that the market is not personal. No spike, no crash, no wick is an attack on them. That emotional detachment is huge. If you start thinking the market is out to get you, your decision-making turns into chaos. Pros see the market as a set of probabilities, not a personal vendetta. This mindset, combined with controlled breathing, correct sizing, neutral bias, and discipline, forms a mental armor that makes volatility almost irrelevant. It doesn't eliminate risk, it just keeps your brain clear enough to handle it. But here's the kicker. Staying rational doesn't mean pros never make mistakes. They do. They get stopped out, they misread patterns, trades go against them. The difference is that when it happens, they don't spiral. They don't chase losses. They don't tilt. They step back, reassess, and stick to their rules. That's why you see consistent profits over months and years from pros, while beginners ride a roller coaster of wins and emotional blow-ups. And that brings us to the natural next step, because staying rational during the move is one thing, but avoiding panic completely requires more than just in-trade psychology. There are techniques and tools pros use to make sure their emotions don't hijack their account. And trust me, these aren't fancy hacks or complicated systems. They're simple, powerful, and, when applied consistently, game-changing.
First up, let's talk about position sizing. We've touched on it before, but here's where it gets real. Pros don't just guess their trade size. They calculate it based on market volatility, often using tools like the ATR, the average true range. This lets them adjust their position so that even if the market jumps, they're still comfortable. Why is that so critical? Because if your size is too big, one normal swing feels like a punch to the gut. Your heart races, your fingers start twitching, and suddenly you're in panic mode. But with ATR-based sizing, the trade feels manageable. You can breathe, you can think, you can execute. You're not just trading the market, you're trading your emotional capacity too. Then there's the mechanical stop loss. Let's be real. Beginners and intermediate traders have this habit of moving stops around like they're playing a video game. Oh, maybe I'll give it some room. Maybe I'll move it up a little. That's the fastest way to blow your account. Pros, on the other hand, set their stop loss before they even enter the trade and leave it there. No wiggle room, no emotional edits. This simple discipline prevents panic decisions because once the stop is placed, the risk is defined. You already know your worst-case scenario, so your brain isn't screaming at you every tick. You can focus on executing your plan instead of reacting to fear. Another technique is system adherence. Pros follow their rules, always. Not most of the time, not when it feels right, but every single time. They don't improvise based on gut feeling or market hype. Their system tells them when to enter, when to exit, how to size, and when to walk away. Following a mechanical system takes the pressure off your brain. The market can do whatever it wants, and you just let the system guide your actions. That's how you avoid emotional chaos when things go haywire. Beginners who don't have this end up overtrading, chasing moves, and panicking at the first sign of turbulence. Mental models also play a huge role. Pros don't just act on price alone. They have mental frameworks that guide how they interpret market moves. They constantly ask questions like, is this noise or signal? Am I reacting to probability or emotion? Is this trade aligned with my risk plan? These mental checkpoints slow them down just enough to prevent snap reactions. Think of it like a mental safety net. Every decision gets filtered through a rational lens before it leaves the brain. And it's not just theory. These tools work together in real time. Imagine a trade going against you. Without techniques, your hands shake, your heart pounds, your ego flares, and suddenly you're making desperate moves. But with ATR-based sizing, mechanical stops, system adherence, and mental models in place, your reaction is completely different. You recognize that the trade is moving exactly as the system expects, the risk is defined, and there's nothing left to panic about. You execute the plan, no emotion involved, and you move on. What's interesting is how consistent pros are with these techniques. They don't skip steps just because the market looks quiet or easy today. Every trade gets the same setup, same rules, same preparation. Consistency is what compounds over time. That's why pros survive drawdowns and thrive over years, while beginners bounce from boom to bust. Emotional discipline isn't a lucky accident. It's engineered through deliberate techniques applied every single session. And here's another subtle but powerful point. These tools don't just prevent losses, they also improve decision-making under pressure. When you know your risk is capped, your stops are set, and your system is guiding you, your brain can focus on higher-level thinking instead of panic. You start seeing the market clearly instead of through a lens of fear or greed. You start recognizing patterns without pressure. You start executing like a pro instead of flailing like a beginner. Now, here's where things get really interesting. Even with all these tools, every trader will face moments where the market does something unexpected. That's when beginners lose it. But pros, they have one last trick. They never let one trade spiral them out of control. The techniques we just talked about don't just work in isolation. They set the stage for emotional resets and reality checks when the unexpected hits. Without these tools in place, a bad trade can cascade into an emotional meltdown. With them, a bad trade is just data, informative, not catastrophic. And that leads perfectly into the next part of our journey, because knowing the tools is one thing, but understanding what pros never do during volatility is another. That's where a lot of traders trip up. Even if they have all the tools, breaking simple rules under pressure is what causes panic and losses. So next, we're going to cover the behaviors pros avoid entirely, and why avoiding these mistakes is just as important as using these techniques.
All right, now that we've gone through all the techniques pros use to stay calm and rational, let's flip the coin and talk about something just as important, the stuff pros never do when the market is volatile. Seriously, this is where beginners get crushed the fastest, and it's not because they don't have a system or indicators. It's because they're doing exactly the things pros refuse to touch. Understanding this is like getting a cheat code to your own psychology, because it shows you the line you should never cross if you want to survive and thrive in chaotic markets. First off, pros never chase the market. Beginners see a spike or a pump and think, oh snap, I gotta get in now before I miss it. That's the quickest path to panic trading. Chasing moves is emotional, reactive, and almost always wrong. The pros? They know the market will give them opportunities again. They're patient. They wait for setups that match their plan. Volatility doesn't scare them because they don't need to grab every single move. They understand that missing a trade isn't the end of the world. Panicking into a bad trade is. Second, pros never move their stops out of fear or hope. Beginners do this all the time. A trade goes against them, and they're like, I'll give it a little more room. Maybe it'll turn back. That's emotional disaster waiting to happen. Pros set their stops before entering and leave them alone. They accept that if the trade hits the stop, it's part of the game. This simple refusal to mess with stops protects them from emotional spirals, from overtrading, from revenge trading, basically from doing something stupid that could wipe out all their progress. Another thing pros never do is let ego control decisions. Beginners often stay in a trade just to prove they were right or win back what they lost. Pros never fall into that trap. Their ego doesn't get tied to one trade, one win, or one loss. They see each trade as just a piece of the bigger picture, and they refuse to let pride or stubbornness dictate their actions. This detachment is why they can stay calm when everyone else is yelling at the charts or hitting their keyboards in panic.
Pros also never over-leverage, even when the market is screaming opportunity. Beginners love the idea of maxing out on volatility, thinking a huge position will make them rich quick. But this is exactly how panic sets in. The bigger the position, the bigger the emotional swings. Pros know that to stay calm, they have to keep their exposure manageable. Even in crazy fast moves, they want to feel comfortable enough to think clearly, not stress about whether one candle will blow their account. And here's a subtle one that beginners miss. Pros never ignore their pre-trade plan mid-trade. We've talked a lot about pre-trade routines and stability protocols. Beginners often enter a trade, things start moving, and suddenly they forget all the rules they set for themselves. They start improvising, adding, moving stops, guessing, doubling down, basically throwing their plan out the window. Pros don't do this. Once the plan is set, they follow it to the letter, even when the market is trying to freak them out. That's how they maintain control under pressure. Pros also never let fear or greed dictate action. Beginners are constantly swinging between extremes, panic selling during a small pullback, or greedily holding on to a trade too long, hoping for just a little more. Pros approach the market with neutral expectations. They respect the moves, they manage risk, but they don't emotionally attach to winning or losing each individual trade. This mental discipline stops panic decisions dead in their tracks. And another key thing, pros never get reactive to random noise. Volatile markets throw out spikes, fake-outs, and wick after wick. Beginners see these and think they have to do something, jump in, cut losses, or switch positions. Pros, they observe, they wait, they filter the noise through their mental model, asking, is this a real setup or just randomness? By refusing to act impulsively, they avoid the mistakes that make beginners spiral emotionally. The underlying theme here is simple. Pros don't let the market mess with their head. They set boundaries, they respect their system, they manage risk, and they refuse to do anything emotionally. Everything they avoid, chasing, over-leveraging, moving stops, acting on ego or noise, is basically a list of beginner mistakes that destroy accounts. And the best part is, once you stop doing these things, you've already removed 80% of the risk that comes from emotional trading. But here's where we naturally move forward. Avoiding these behaviors is huge, but even pros sometimes face a trade that hits them emotionally. Maybe it's a stop loss, maybe it's a sequence of bad trades. That's where their reality check framework comes in, the method they use to reset their mind, zoom out, and prevent emotional contagion from wrecking the rest of their trading session. Understanding what not to do sets the stage perfectly for learning how pros recover and reset after volatility hits. So next, we're diving into the reality check framework, how pros prevent emotional spirals and keep their head cool when the market tries to throw them off balance. That's where the real secrets of staying calm under pressure come alive. Alright, so by now you know what pros do before a trade, during a trade, and the things they never do when volatility hits. But let's be real, even pros aren't robots. Sometimes the market smacks them with moves they didn't expect, stops get hit, or a streak of trades goes sideways. And in those moments, what separates the pros from the rest of the pack is their reality check framework. This is how they hit pause, zoom out, and reset their emotions before making another move. The first thing pros do when things start feeling intense is literally take a step back mentally and emotionally. They don't try to trade through panic. They don't convince themselves, I can fix this in the next trade. They recognize that emotional contagion, that internal freakout feeling, can spread fast and ruin multiple trades if unchecked. So they pause, they breathe, they remind themselves that one trade, one swing, or even a full session doesn't define them. It's data, not judgment. Zooming out is a huge part of this. Instead of obsessing over the tick-by-tick chaos, they look at the bigger picture. They check the broader trend, revisit their trading plan, and reevaluate risk exposure. By doing this, they shift perspective from, oh my God, I'm losing money, to, okay, this is where we stand, here's what's actionable, here's what's not. It's like switching from a microscope to a drone view. Suddenly, the panic-inducing details shrink, and clarity comes back. Another element is regrounding themselves physically. Pros understand that emotions live in the body, not just the brain. A racing heart, tight shoulders, shallow breathing, all of that feeds panic. So they reset physically. Stretch, loosen up, take a walk, or just sit quietly for a minute. This resets the nervous system and gives the mind a clean slate. Beginners often ignore this, but it's critical for emotional recovery in fast-moving markets. Pros also check themselves against their predefined rules and systems. They ask, am I trading according to my plan? Am I following my risk management? This self-audit isn't about shame, it's about data and accountability. It reminds them that the market doesn't get to control their decisions, they get to control their process. By focusing on rules instead of results, panic doesn't get a foothold. And here's a subtle but powerful point. Pros avoid looking at other traders' reactions, news hype, or social chatter during this reset. Beginners often jump from one chart to 1,000 forums, letting fear and hype spread like wildfire. Pros know that emotional contagion is real, it's infectious. So during their reality check, they disconnect from external noise and focus on their own charts, their own plan, their own mindset. This keeps them centered and prevents the kind of knee-jerk decisions that wreck accounts. Finally, they mentally remind themselves of long-term perspective. One trade, one session, even one losing streak isn't the end of the world. Pros have been through this before. They trust their process. They accept that losses are part of the game. This mindset shift takes the emotional charge out of the moment and allows them to step back, reset, and re-enter the market with a calm, rational state. In short, the reality check framework is all about stepping out of the chaos, grounding yourself, trusting your process, and avoiding emotional contamination. It's the reset button that keeps professionals consistent over time. Beginners and intermediates who learn this principle quickly will notice their panic episodes shrinking and their confidence growing. And here's the kicker. Once you've mastered the reality check framework, it sets you up perfectly for the next stage, a simple, actionable routine you can start using today. This is where all these lessons converge into a step-by-step mini protocol that even beginners can implement to stay calm and rational in volatile markets. That's coming up next. All right, now we're getting to the part that's going to make all this talk actually actionable for you. We've gone deep into what pros do before, during, and after volatility, and we've covered the mindset, the techniques, and the behaviors to avoid. But if all that stuff stays in theory, it's not going to change your trading. What you need is a simple routine, something you can actually start doing today to stay calm, focused, and rational in volatile markets. And trust me, even beginners can pull this off if you stick to it. The first thing you want to do is set your mental state before the market even opens. This isn't complicated. It's just about grounding yourself. Take a few deep breaths, relax your shoulders, unclench your jaw, and get into a neutral, calm mindset. Think of it like getting your brain out of fight or flight mode before stepping into a hurricane. If you start the day already stressed or hyped up, the market's going to feed off that, and you'll be chasing trades or panicking in no time. Next, go over your plan and risk rules. Know exactly how much you're willing to risk per trade, per session, and make sure your size fits your comfort level. This isn't just about numbers, it's about emotions. When you define risk ahead of time, volatility loses its power over you. You can watch a wild spike without feeling like your heart's about to explode, because you know, okay, if this hits, it's within my limit, I'm good. Then identify your setups. Look for the trades that align with your strategy, the clean entries and exits you've practiced. Pros don't force trades just because the market's moving. You don't have to jump into every breakout or dip. Pick the setups that match your rules and leave the rest. This keeps your mind clear and prevents emotional chasing. Once you have your trade in mind, set your stops and targets mechanically. Don't move them on a whim. Trust the numbers. This gives your brain a safety net. You know exactly where the trade could go wrong and where it's supposed to go right. When your stops and targets are in place, your emotional load drops instantly. You can focus on observing the market rather than panicking at every tick. As the trade unfolds, keep checking in with yourself mentally. Are you feeling tense? Are you itching to move your stop? Are you hoping the trade turns your way? If you notice your emotions creeping in, take a quick pause, breathe, reset, and remember your pre-trade rules. This is where the reality check framework comes in. Zoom out, look at the bigger picture, and remind yourself that one trade doesn't define your session. Another key part of this routine is neutral bias and observation. Don't get married to your prediction. Watch the market objectively. If it moves against you, let your stop do its job. If it moves in your favor, stick to the plan. Don't let hope, fear, or ego dictate decisions. Stay neutral, stay patient, and let the market show you what it wants to do. And here's a subtle but huge step. Review and reflect after each trade. Even if it's a small win or loss, take a moment to check what went right and what went wrong. This isn't for judgment, it's for learning and reinforcing emotional control. By making this reflection part of your routine, you're training your mind to respond rationally over time, not reactively. Finally, keep the routine consistent. Pros are calm not because they're naturally zen, but because they do the same steps over and over until it becomes second nature. Morning mental prep, clear risk limits, proper sizing, mechanical stops, neutral bias, reality check pauses, and post-trade reflection. Do this consistently, and the chaos of volatility starts feeling manageable instead of terrifying. Here's the cool part. Once you integrate this routine, you'll notice something almost instant. You stop panicking over normal swings. You stop chasing trades or doubling down emotionally. You start seeing the market clearly and making rational decisions even when things get crazy. And the best part? This routine works for beginners, intermediates, and even pros because it's all about managing yourself, not the market. And this sets us up perfectly for the final part of our journey, the final message and call to action. We've gone from why traders panic to what pros do differently, to techniques, tools, behaviors, and routines. Now it's time to wrap this up with a little inspiration and a push to take action, because everything we've talked about only works if you actually implement it. Look, volatility isn't your enemy, your reactions are. The pros don't chase, panic, or let emotions run wild. They prepare, stay disciplined, and follow routines that keep their mind sharp no matter how wild the market gets. You can do the same. Start small, stick to your plan, and remember, calm beats chaos every single time. If you take just one thing from this video, let it be this: don't panic, do this. Hit like, subscribe, and turn on notifications because your trading mindset is about to level up.